All right, Tony, let's kick this thing off. Really excited to be speaking with Tony Zingale today. Tony is a highly accomplished leader who has held the position of CEO for three separate companies, really, really unique, both private and public markets. And he's also one of Harmonic's CEO partners, a role you, Tony, are supremely qualified for. I was thinking maybe to start, it'd be awesome to hear just a quick snippet on your career journey, what led you to assuming your first CEO position at Clarify, and how you then turned that opportunity into the chance, to run two more companies,
Right.
Mercury and then Jive, and just kind of bringing us up to present day.
Yeah, I get asked all the time, like when you were in college or when you were in your first job, was it your vision to be a CEO? And the answer to the question is absolutely not in my case. Some people that is the case, but in my case, I worked in the semiconductor industry and then in the electronic design automation industry at Intel and Cadence Design Systems, respectively, and just progressed in a number of different, more market-facing roles, marketing and selling, product marketing, every version of, the go-to-market motions of a company. Despite having an electrical engineering and computer science background, I just felt more comfortable in those roles in those companies. And I got to a point in my career in the late '90s where I felt like I was ready, having had great mentorship throughout my career, at the companies I mentioned, Andy Grove at Intel and Joe Costello at Cadence, where I wanted to give it a shot. I thought I was ready for the next thing, that I'd checked a lot of boxes in my career. So I got the opportunity to run Clarify, which was a company that was already public, but had kind of crashed and burned and lost its way. And we'll talk a little bit later about the shift from a product oriented leadership team to a go-to-market oriented leadership team as you hit that growth trajectory. And so I came in to Clarify, and I just really embraced the role. And was I a born leader, or can you learn about leadership by picking a book off the shelf in an airport? No, you cannot. I think you either have it or you watch it and learn it. And then you have to go do it. You have to go come up with your own leadership model. And I really tried a lot of different things at Clarify, and we did extremely well. We turned the company around. We doubled its size. We sold it for $2 billion at the time to a networking giant that wanted to run software through the pipes. And then I joined a board of a company called Mercury Interactive, and I had the opportunity to do it again. And this time it was in crisis mode, where Mercury had some issues with backdating stock options and accounting and what have you. And so I stepped in off the board to turn Mercury around and also double its size from 500 million to $1 billion. And then eventually navigated and engineered the transaction with Hewlett Packard for over $5 billion in 2007. Then again, I was asked to sit on a board with my good friend Jim Getz at Sequoia. It's called Jive Software. This was at the beginning of the social networking craze. It was driven by Facebook and LinkedIn, and a company called Jive Software was going to bring that paradigm to the workplace, in terms of enterprises working socially within their environments. And that was Jive Software, and came inside off the board again, and ran Jive for 5-6 years, took it public, $1 billion valuation, and we exited Jive in 2017 to a private equity company. And since then, I've been hanging out with the Harmonic guys and sitting on boards and coaching first-time CEOs out of the Sequoia portfolio, on and off over the years.
Awesome, awesome. Thanks so much, Tony. Incredible career so far, and hopefully still going here.
Yeah.
All right, so let's start high level for a second. I want to talk a little bit about what it takes to manage people, to lead people, to drive people to a common goal. Clearly, you've had success doing that. Can you talk a little bit about culture and the importance of culture for growth stage companies? Like, how did you think about creating a winning culture at the companies
Yeah.
you ran?
Well, the the subject of culture comes up all the time, and I happen to be a massive believer in a winning highly effective culture working all together, being a game changer, like a new product, like a killer salesperson, like a, reference customer that is just willing to talk to anybody else about buying your company's product or service. I think it's that potent in the mix. And, obviously, um, you have to be a leader to lead people and executives and bring them along with you. And I always use the words that, to me, culture is synonymous with leadership and building that following in the workforce, particularly in software companies, because all you have is the people. That's it. I mean, source code and your business model and yeah, but it's all about the people. And so the two words I always use when I talk about culture is, you, as a leader, as a CEO in this case, is you have to inspire and motivate. And so how do you do that? Are you going to cheerlead? Is that inspiration, getting out there with pom poms and go, let's go? Sometimes, right? But more importantly, how you inspire people and motivate people is with, where are we going and why? What's the strategy? What do we hope to accomplish? And it's not, and we got very jaded in Silicon Valley around the goal being, let's go public. That's our mission. Well, that's not the mission. That's a step along the way, and we'll come back to that in a future question. But, inspiring and motivating people is all about communicating honestly and directly the strategy and what's behind it, and connecting the people, every one of them, to that strategy, every element of the strategy. I used to say things like, oh, the engineers, or we talk about sales culture and winning deals, and the engineers will be sitting there going, well, that doesn't involve me. That's not me. And what you have to tell them is, everybody's in sales. Everybody. Engineers are in sales. Why? Because people buy the product, and the feature set might not be just right, but it'll come in the next release. Or, whoa, we've got a great idea from a customer. Now we're going to add that into the product. Everyone's in sales. You might be asked to participate in a sales cycle. And so that's just an example of connecting everyone in the company to the strategy. That's how you motivate them. So when the sales guy calls the engineering manager and says, hey, I need you in this meeting, or I need this feature, or where's it at on the roadmap, they don't hang up the phone or you don't respond to the email. They, in fact, lean in and feel engaged because they're part of the whole motion that's going on. So, honestly, communicating with the people, and depending on the size of the company, it starts with your leadership team. And we'll talk about that more too. But so fundamental that the people on your direct team have to be the embodiment of you, because you cannot be everywhere. And they have to support in their own way and communicate in their own way the strategy and the discipline and the accountability behind everything that the company is trying to do. So, I think it's a myth that, the CEO goes to the mountaintop and comes down with the two tablets, as we approach Easter here. And there's the answer. Like, so let me articulate the answer. That's not it. It doesn't work that way. The CEO might have a couple ideas, but everybody in the room is very smart and sharp and bought into what we're trying to accomplish. So it's actually the synthesis of your leadership team's ideas, strategies, position points, product points, you name it, that come together as the strategy. And boy, being inclusive to your leadership team as a CEO is fundamental. If you're going to dictate and tell them the answer, they're just going to wait for the answer. It doesn't work. You want this collaborative, inclusive environment where everybody's on board, and then you bust out the pom poms, right? And then
Awesome.
when it's working, yes, you absolutely celebrate. You take a moment, you smell the coffee and the roses, and you celebrate the success, product, sales, customer turnaround, whatever, a financing round, of course, going public, whatever it is. You celebrate that, and you look at your watch and go, are we done now? Because now we got to climb the next mountaintop. Let's go. And the moment you're able to do that with your team, they're behind you. You got them. They'll follow you. But it starts with that honest communication on where are we going and why, also called strategy, right?
Yep. It fires me up hearing you talk about this stuff,
Right,
Tony.
right.
It fires me up. Just curious, Did you learn this from any mentors and managers and CEOs throughout your earlier career? Or did you just like learn this on the job as you began managing and leading people and running companies? Like, I mean,
You
you,
know,
you talk about it with such passion, you
you
know.
add your own touch to it. But boy, I'll tell you that the individual that showed me how to do this, was the embodiment of inspire and motivate. Super strategic thinker, and could really, inspire and motivate like nobody else. Joe Costello, he led Cadence from zip to over $1 billion in 10 years back in the day. But he was the consummate motivator, and I learned it there. I learned it the hard way with a lot of you are too young to remember Andy Grove and Gordon Moore and Bob Noyce from Intel. Andy Grove wrote the book Only the Paranoid Survive. So his method of inspiring and motivating was, we're paranoid. We're great, but we're paranoid, and we gotta go. And Intel was great at articulating the strategy and connecting everybody to it. Absolutely great at it, almost surgical in the way they did it. And Joe Costello was, he wasn't the showman, but boy, could he sell the vision, the strategy, and connect every employee in the company to it, so that they would run through brick walls for him. So and then you add your own personal touch to it.
Yep.
I'm a
Yep.
I'm a I'm a sports guy, and I'm team sports guy, so I add a lot of sports cliches to all of my leadership and cultural styles. Some people go for it, some don't, but I'm sorry, it works for me, right?
Hoops plays, man. It
That's right.
plays across
That's right.
industries.
It's a team
Um,
sport.
okay, awesome answer, incredible. Depending on your answer here, we may be staying on this topic a little longer, but I wanted to
Okay.
give you a situation. Um, if you were to give a CEO one piece of advice who's running a business with, let's say, $25 million of top line revenue, and aspirations to take that company into the hundreds of millions of dollars in sales of revenue, what would be that piece of advice?
Twofold. Sorry, I know you asked me for one, but I'm going to give you two. Number one is 25 million. You've already proven you have some amount of product market fit. You found white space in the market. Your product, probably multiple versions by that point, with multiple tens, if not 100 or so customers, depending on the business model. So you've already proven you have product market fit. Building your team for the next stage of growth. The salesperson, that leader that might have brought you to 25 might not be the person that takes you to 50. In fact, many times they are not. Same for product, same for customer success. Go down the list and evaluate your team. And in a sense, you have to be ruthless about it, because these are the people you're going to depend on. As a CEO, you cannot do it all like you did when it was 10 million. In every sales call, in every product meeting, you can't be there. You won't scale if you're dependent on yourself to being the tiebreaker on all these things. So team, team, team. Second of all, and this is the big one I always give to first-time CEOs, you have to be great at one thing. You have to be great at something. Your first product, so many companies move quickly to building out the portfolio, and I understand why. It shows, multiplicity of products, and customers buy more than one thing, increases the average selling price. I get it. Most importantly, though, what are you great at? Like, where do you never ever lose? Right? And the embodiment of this point is focus, focus, focus. So many companies get to 25, 50 million, and they lose their focus. They lose their way. They lose, product excellence in the thing that was great that got them there. And move that team over to the second generation of the product. No, right? Do the second product, the third product, the fourth product. Absolutely. Do M&A, do it inorganically as well as organically. But what are you going to be known for in the marketplace and never lose in terms of your sales campaigns? So team, 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 be great at something. And the embodiment of that is focus, focus, focus. I see so many young first-time CEOs lose that focus after they experience 25 million is pretty good success. from a product market fit point of view. The investors are like clamoring for, hey, we got to go to 100 now. Let's go. And so they go, we're going to build this product or acquire that company. And they lose some of that entrenchment that they've worked hard on to gain. Don't lose it. Don't lose
Okay.
it.
Okay. Great answers. Staying on it for a second. That first piece of advice, how do you evaluate the team that's gotten you to 25? You're not sure if that's, maybe it's your head of product, your head of sales, whoever. You're not sure it's the right individual to get you to 50 to 100 plus. What are the signs there to so that you
Yeah,
notice that, and then how do you go about fixing it,
yeah. Unfortunately, the it takes some experience to see it, to know it. But if you don't have the experience, this is where you lean on potentially outside board members to give you a read because they've seen sales leaders, tens of them at $25 million. So just to use sales as the example, as you go from 25 to 100, obviously the teams grow and because you need the productivity of the teams to become super efficient because it's the most expensive set of resources in the company, the sales expenditures. So the individual slash sales from 0 to 10 and 10 to 20 has to probably get out of the deals, right? The deals and get into more operational oriented things, hiring, firing, photography, partners, working with the product group based on his experience. Most potent voice in the company ought to be the head of sales because he or she sees it every day. What works, what doesn't work competitively, what works, so it doesn't work. So the ability to make that transition, and some first time sales execs can make that transition. A lot of them can't just because they're killer salespeople. Just let them keep selling, right? So that's one. On the product side, it's like with multiple products, then it ultimately becomes managing larger teams, multiple products, probably remote geographies. You're not going to develop everything in Silicon Valley. That's long gone. You're going to develop in multiple sites. And also, who's innovating? Where are you getting your innovation ideas? Again, maybe an opportunity for outside board members to speak up and provide some innovation insight into the head of engineering because as they move from 25 to 100, they're so focused on the next release and bug fixes and managing the organization that they lose sight of innovation many times.
Yeah. All
So
right.
those
So
are a few examples.
that's a perfect transition. Okay, so sometimes you need to lean on outside counsel, advisors, people that have been there, done that.
Correct.
When you were running companies, how did you think about board composition? What were the ways, the board or specific board members really provided value? It sounds like,
Right.
the things you just discussed. And then how do
Right.
you now try to provide value on the boards
Great
that you
question.
sit on?
Great question. And so there's a real difference between a private venture backed, private equity backed company, right? Because typically those investors are going to get the board seats, right? And a public company where the CEO now has a big voice in who sits on. Not that the CEO doesn't have a voice in the private company, but it's a little preordained based on, if Greylock writes $100 million check, they're probably getting a board seat, right? So, right. So, um, I'll shift to the public one because it kind of is more coincident with your question. I always viewed building my board, a lot of CEOs view it as a pain in the ass, right? They're managing me. I got to do the board meeting. I got to do the but yes, it is challenging. It is challenging. But I always viewed it when I built my boards, particularly at Jive, where I felt I built the best board I've ever had, like I was cheating, right? I had Sundar Pichai on my board, CEO of Google. At the time, he was the head of product at Google. How did I get Sundar? How did I meet him? Jim Getz from Sequoia, is, connected to him. So I had Dave DeWalt on my board, had previously run, several public cybersecurity companies, and I could go down the list, but you add skill sets on your board that can add value based on my prior answer. Dave DeWalt, consummate sales executive, right? Help me out on interviewing these two guys. Is this guy going to make it or not? Absolutely. Sundar, having a chalk session with my engineers at Jive about user interface, where there wasn't enough room in the room because everybody wants to hear what he has to say, right? Where board members have the time and the energy to, in fact, lean in a little bit at the company. So I constructed my boards across skill sets. Obviously a finance, former CFO, former CEO, a killer sales executive, uh, product innovation leaders, et cetera, et cetera. And then, of course, the requisite investor set, such that I could look across the room and every issue that would come up in a board meeting was covered, right? Hey, Dave, what do you think about our sales model? Right? Dave DeWalt in this case. Hey, Sundar, are we developing code the right way? How do you guys do it at Google, right? And Jim gets, so Jim's a former operator, which is not so unique anymore for venture guys. But Jim sits in a partner meeting every Monday morning and he sees 30 companies reviewed in the meeting. So, Jim, what are your 30 companies in Sequoia doing? Well, let me connect you with the guy at WhatsApp, in terms of how they're developing software and what their user experience is all about. So those are the types of things you can leverage. In the private company situation, it's harder because they're the investors, and you have to kind of luck out that the investors either have operating backgrounds or their networks, which they typically are substantial to provide expertise and counsel. In addition to what everybody can provide from a venture community point of view is money and their network. That's kind of it, and
Yeah.
their credibility as a venture fund.
Do you think that's a problem within private markets and an evolution within market structure that needs to occur? I mean, obviously, with Harmonic's model, that's what we're trying to fix.
I
Like, do you
I,
think
I
this is a
think
problem?
I think it's an absolute blind spot. You've got six venture guys on your board, and they're all interested in how's the quarter look, and who's the sales leader and who's the product leader, and et cetera. But who's providing kind of the next level of expertise around some of the topics we've touched: sales leadership, product leadership, you name it. And so that's where these outside independent directors come into boards if the investment community is willing to have them. Or in my case at Sequoia, Jim would dispatch me to go sit with, so and so over at, Clary to help them out with, you know, their growth trajectory as they move past some of these challenges. So I do think that then. So
Yeah.
obviously I'm at Harmonic, and I'm a big believer in this because I think we add tremendous value. I always tell CEOs, look, I'm not the best CEO in the world, or I wasn't the best CEO in the world, but I've been doing it a lot longer than you have. And if I can save you time, which is what you don't have, you do not have time. If I can save you time because of my pattern recognition being better than yours, by virtue of I've done it for 25 years, that is a huge benefit. And we have to have chemistry, that you have to be able to trust, these individuals as they give you advice and what have you. But that's what I try to accomplish. And I think the harmonic model is spot on, offering that in addition to capital. Like, here's the expertise as you put that capital to work. You don't have time to
Awesome.
make a mistake. You don't have time to make a bad hire. You don't have time.
Yeah. Awesome. Just awesome answer all around.
Yeah.
All right. Let's talk exits for a second.
Okay.
Something we're always thinking about in private markets.
Right.
Something you and I are always talking about, both on the investor and operating side of the equation. When thinking of driving exit value, what are some of the things CEOs and management teams need to be thinking about well in advance of an M&A or IPO outcome?
Yeah, there's the perfunctory, stock answer around, is the company structured to go public? Meaning, does it have its finance and accounting systems and, its sales automation systems? Does it have all the information systems in place such that you can report, publicly, your results? Do you have the head of people in place and your compensation structures and, all of the cultural aspects around, ethics and what have you. Your board has to be structured with all the committees, audit, compensation, and governance, et cetera. So there's all this structure that has to go on, and private companies need to start kind of a year in advance putting that structure in place before they even contemplate writing the S1, right? Because it's fundamental and it takes time. Back to the board conversation. Um, but most importantly, let's not be confused. Exit value is, in my era, was 100% tied to growth rate. Period. The end. Period. The end. Growth rate. What do you do? And consistent growth rate, not, oh, we did great in Q4. Well, Q4 is the best quarter of the year. Of course you did great, right? How'd you do, after that, right? And what does the forecast look like, et cetera? So growth rate. But I will tell you, and you know this as well as I do, Daniel, over the last 4 or 5 years, it's really shifted to growth rate and profitability, right? Together. So you have to show that you're an efficient business capable of generating a profit in a variety of different, free cash flow or, there's all these variations on EBITDA, et cetera, that you can go through, but it's really those two. However, I would tell the company to not lose focus on growth rate, which means great product. You never lose on this. You've got a product roadmap that shows follow-on offerings to put in the portfolio so you can increase your average selling price in every transaction. You've got your team in place, as we talked about, and you're ruthlessly focused on Salesforce productivity, your most expensive asset in the company, because you're providing them a great pipeline, a phenomenal product, excellent competitive positioning in the marketplace, and customer success organization that makes sure that the customers are using the product and delivering business value inside their companies, right?
Yeah.
So
Yeah.
it's not one thing, but growth rate kind of trickles down to like 10 things, right?
Yep.
Because you're not going to
Yep.
have it unless you have all those other elements I described.
Yeah. And you and I have talked about this, but the shift to profitability over the years and or last few years. And, I think you're saying it, best. The market rewards growth over all else. And if you think about like a simple metric that we look at in private markets, like the rule of 40, for instance,
Exactly.
tell me what's going to get a better multiple, a company growing 40% top line and break even, or a company that's got 40% EBITDA margins not growing.
Yeah, the
Like
former times 10. The former
exactly.
times 10.
Yeah, exactly.
And,
And
back in my day, when we took Jive public in 2011 or 13, I can't remember, it was growth, 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 and a path to profitability that you had to show in your 3-year model, right? That's what it
yeah,
was. But now it's not the case, to your point. And break even's a win, right? You know, cash flow positive's a win. EBITDA, like 20% EBITDA, woof,
yeah,
you're celebrating, but you're giving up something at the size of companies we're talking about. And that it's also moved. Back in my day, it was 125 million dollars of ARR. Today, it's like kind of think over 200 million. And so, yeah, even higher, maybe. Yeah, you're right. So,
yeah.
and the last thing I'll say on this exit value, so many CEOs, and I talked about it in the first 2 minutes of our conversation today, think the end zone is going public. I got news for you. That's
It
the
started.
kickoff. That's the kickoff. That's the kickoff.
Yeah,
It just gets harder. And when you're public, there is no shade. There's no shade. None. Everything is, by virtue of the word, in the public's eye.
yeah. Okay. All right. Well, let's stay on this for a second. A little bit more of a fun one, and then a general, kind of a general comment on the current market, the lack of IPOs in recent years, and a seemingly common desire for companies to remain private for longer. So, first, what do you think the biggest differences are to being a public company CEO versus a private company CEO? And then, I think we're all aware of the positive attributes of remaining private that are getting floated right now in the market. But what do you think are maybe the often overlooked positive attributes of going public and being a public company CEO outside of liquidity?
I, I think it's really blurred. You look at Databricks, right? Used to be going public would be this massive PR event, and it's a credibility event with your prospective customers, and it's a obviously capital raise event, right? And it gives you this platform to speak on all the investor conferences, you're on CNBC, or you have this megaphone to the marketplace that you typically didn't have when you're private. Well, look at Databricks. Private, their valuation is talked about every week. They're not going public yet. They're raising billions of dollars. They have the voice. They're at all the investor conferences without any, I won't, that's too strong, without the volume of scrutiny that goes on from 20 different analysts taking apart your P&L and your balance sheet and asking you millions of questions as not ad nauseum. So the big difference, if you're a private company CEO, is you don't have to invest time in all that,
Hmm.
answering all those questions, to basically earn the right to be public and expose your quarterly earnings and your annual earnings to the public markets. By being private, you hold your cards to the chest. You can make investments. You can, exit people, senior executives from your company and not disclose it. You can do 5% layoffs and not disclose it. I mean, everything is kept close to the chest, except for the things you want to broadcast. Hey, we just raised $5 billion at a $25 billion valuation. Get the pom poms out, right? And that's it. Well, how's next quarter look? Right? What's your customer retention, rate? How productive is the sales force? They don't have to answer any of those questions. Really good. Salesforce is really productive. Well, that won't get it done with the analysts from Goldman Sachs. I'm sorry, right? They got like your last 6 quarters, P&Ls in front of them. They're seeing the trends. They got 25 people working this, the analysis of your company's financial performance. So the headline is, you're, as a CEO of a public company, your time focus and a lot of your, not all of, because many of the same things still apply. I don't want to, lead anybody astray in terms of team and product focus, inspire and motivate, et cetera. Those things stay no matter what. But your time, you're going to investor conferences, you're doing quarterly earnings calls, you're debriefing your board in advance and your workforce in advance. When you're private, you do that as well, but in a much more informal way. And you use it to your advantage. When you're public, again, there's no shade. Hey, if we miss the quarter, I'm talking to the board, I'm talking to the financial community, I'm talking to my employees, I'm talking to everybody. And all my competitors are, taking advantage of that I just missed the quarter. Ooh, you know, oh, big product problem. Oh, they lost 3 of their biggest customers. It's all in the public eye. It's all out there. So it's a lot more daunting to be public than it used to be. And I think many of the advantages and benefits, if you're killing it, which is a huge if you're killing it, a la a Databricks, not everybody is, it's beneficial to stay private as long as possible. It really is.
Awesome. Awesome. And so you totally understand the market dynamic right now, private for longer. Sounds like you're as somebody who's run private and public companies, you'd rather be kind of a late stage private company CEO than a public company CEO because of that scrutiny.
Yeah.
So that you think net, like you understand the dynamic and there's no real benefit for you, the CEO or the company, if you can withstand it, to going public.
I, I wouldn't go that far. It's still the preeminent event for a venture backed, private equity backed company. It is the ultimate determinant of, is this company worthwhile or not, right? I mean, initially, and like I said, it's the beginning, it's not the end. But the hurdles and challenges to get from, 3 guys in a garage with a dog to a, 2 to 300 million dollar ARR, profitable, public company are significant. I think the number, back 3 or 4 years ago was 1 in 13 of venture-backed companies. So it's a huge, accomplishment to get it done. And I still think being public is significantly more credible than the late stage private company that may or may not make it or not. Like we've done it. We're public,
Yep.
right? It's harder for sure, harder. But boy, with that additional degree of difficulty comes a lot of added benefits, but not without investment of time and effort.